I've spent the last couple of years putting the finishing touches on a portfolio of boring stocks and boring investments that pay me cash flow to the tune of nearly 8 figures. And I'm going to tell you why I think entrepreneurs should focus more on this approach than on growth stocks. And I'm going to tell you today why I've chosen to have a bit more boring investment portfolio. I'm going to walk you through the pie chart of where I divert my personal cash. And I'm going to give you my theory on entrepreneurs versus investors and hopefully choosing to be in one camp. If you don't know who I am, I'm Andrew Henderson. I started a company called Nomad Capitalist, and we are a consulting company that at a very high and holistic level helps people figure out how to legally reduce their taxes on their business and on their investments, where to move overseas for those lower taxes, better lifestyle, how to get a second passport to protect yourself. You can learn more at nomadcapitalist.com/apply. But I tell you that because we have a business that does not require tons of reinvestment. Whatever we reinvest into the business, either gets killed pretty quickly because it doesn't work, or it just works and you keep scaling it. And so when you have a consulting business where you're not constantly putting money back into stock, you're not constantly, always having to reinvest in capex and things like that, the equation becomes a little bit different for how you want to handle your personal cash. And so for me, I grew up in the United States. I ultimately left the United States, eventually gave up my US citizenship, and I lived in different places around the world. So my personal tax profile for the lifestyle that I wanted to lead was very friendly. I had a business that was offshore. It doesn't pay really much in tax. I pay tax based on where I live, but for a long time I lived where, hey, you don't have to pay taxes the way you live. And so I could take out dividends from my business and I could invest those how I want. And so here's what I determined. I think everyone needs to have a number for what wealth is to you. But I think what you first want to do is determine, am I an entrepreneur or am I an investor? I think the curse of entrepreneurs is we want to think that we're great at everything. And that's one thing. Like if you look at the most successful clients of our firm, they're like, hey, I'm great at building this. Some of them have taken their company public. Some of them are very wealthy. Some of them are just kind of starting out. They've got $1 million or something like that. But the most successful ones are the ones like, hey, I don't have the time to understand 75 different residence and tax programs around the world. I don't have time to call 1,000 banks like you do, so I'll just pay you and I'll put that time back into my business. And I used to be this way many years ago, which is why I'm such an advocate. The people who are like, well, I'm sure there's some guy who'll do it for 7 grand less. He just kind of copies everything that you do badly. I'll hire him instead. They don't work. So for me, like I've always been an entrepreneur. I think I can drive product and marketing and sales. And like when I really get in there, things get better. There's parts of being an entrepreneur that I'm not good at. I'm not quite as good at the more detailed processes, but driving the vision, driving the goals, hey, have as many options for the clients. Like I'm good at that. I understand investing. I grew up around investing, but I think that my mindset is different. And so I know investors who they have businesses, but the businesses never scale because they don't think big enough. And they kind of apply this logical investor mindset. I know entrepreneurs who try to be investors. My approach kind of when I first built a stock portfolio was just do a bunch of stuff, like don't do anything too stupid, but just do a bunch of stuff, like see what works, see what doesn't work. That's a very entrepreneurial mindset. Like a top investor is not going to do that. And so what I've kind of decided is I would have a pie of cash on hand, which I believe is important. Warren Buffett has cash. Apple has cash. I like having cash. Interest rates are higher now. It's diversified in banks around the world, so it's stable. Yields are higher. And that pays me, some money every year. I have, yield stocks, dividend stocks. I'm going to talk about that today. I have some personal real estate, different homes around the world, diversified lifestyle. I think that's good. Just, as an entrepreneur, who knows what could happen? I want to have access to different countries. Came very much in handy during the pandemic. And then there will be a growth stock portfolio. But for me, here's why I'm not as invested in growth stocks as an entrepreneur. The least risky growth stock for me is the business. And so I come back to how much money would you need if your business fell apart? For me as an entrepreneur, what drives me is it could all fall apart tomorrow. Just watched a video recently on 23andMe. IPO'd, reached $6 billion. It's the talk of the town. Now it's a penny stock. Now you can always rebuild. Maybe a company like that comes back and they have a second wind. Sometimes it's good just to take a whack of cash out of a business, set that aside, go start the next thing. Focus on having your skills. And that's something I've had to learn the hard way. But if you're an entrepreneur, to me, there is risk in having your business. So you want to have some money set aside. Kevin O'Leary talks about $5 million. Other people talk about $20 million. I think $30 million, if you've got a very fast-growing cash flow business, that could be your pie that's divided between the real estate that you own. I don't use debt, so I would just own real estate with that. You have some growth stocks in there, but you've got a healthy allocation of cash and yield stocks, bringing in cash flow so that what? Here's my philosophy. I want cash flow coming in. If you've made enough money from a margin business that you can put into a personal portfolio, and especially if you can do that in a tax-friendly basis, which I'll come back to in a minute, keep the amount of money that, hey, if it all goes to pot, you still have your pile of money over here. And that pile of money is relatively safe, and you're not waiting on, hey, I bought NVIDIA at the wrong time, and it already went up 400%, and now it's going to go back down. I don't know if NVIDIA is going up or down, but keep that money less risky. Now, my investor friends are like, but I want growth. I want a growth stock. If you have a business, would you rather buy NVIDIA stock? I mean, what's a great stock going to do in a year? It's going to double. Some stocks are going to, triple. Maybe they go 4 to 5x. But how many of those are you getting? I mean, not everything you buy is going to be a 4-bagger in a year. We've had some investors as clients, and their goal is between 20 and 50% usually. That's their goal every year. So they might have one that goes 5x, but then they have some losers. You got to balance it out. And I think sometimes entrepreneurs focus too much on only the winners, and they have kind of skewed data in their mind because they're just focused on the optimism of building the business. But as an investor, you've got to focus on the losers. And so for me, I'd rather say, if I take money in a cash flow business and reinvest that back into the business, can I do better than 50% a year? And the answer, if you run any kind of business, I mean, if you can't generate more than that in your business, then you might want to look at being in a different business. And you know your business, and you're in control of your business, and you don't have to worry about, oh, they brought in a new, Jamie Dimon's retiring, or, God forbid one day, Berkshire Hathaway, Warren Buffett's not going to be here. Like, who's the next guy? Is he going to do the same? Like, you don't have to worry about that. You're still here. You know your skills. You can invest in yourself. You're in control. And so I would look at, sure, a growth portfolio for me is probably not going to be as much NVIDIA or ARM or any of that kind of stuff. Growth portfolio for me is going to be more basic stuff. It might be Berkshire Hathaway, but Berkshire Hathaway doesn't pay a yield. So now I look at why I want yield stocks and not just, more moderate growth stocks like a Berkshire Hathaway that just kind of chugs along consistently rather than more volatility. I think volatility for an entrepreneur in a stock portfolio they don't control, we are as entrepreneurs control freaks. And so you don't want to watch wild volatility. My investor friends are like, hey, eventually it'll work out. For me, it bothers me because I don't know how to step in and fix that. And I can't step in and fix it in someone else's business. And, I look at some of these businesses that have more volatility and say that's run by a bunch of corporate hacks, the very thing I'm trying to avoid in my entrepreneurial endeavors. But what I do know is if I can put as much cash to work in my business as possible within reason, then that's the best growth investment I have. So if I get it to a point where I take some money out over time from a business to secure that I'm always going to be successful, because this is like my worst nightmare. You start that business, the IPO's at $6 billion, you own 25% of it, you're a billionaire, you're on the cover of magazines, and then 2 years later you've got $20 million left. I want to keep a slice. And you keep that slice. Again, I'm going to come back how to build that slice faster in a minute. But now my goal is, how do I take that slice, let's say it's $30 million, into paying me to live? And into paying me to live perhaps more than I would live if I was just taking money from the business. Because if you're living on the proceeds of the business, let's say, hey, I'll take a dividend out. Maybe you're not going to take enough to live the life that's going to help you elevate. If you have a $30 million portfolio, just take this as an example, and you can find a way where some's in real estate, you got a nice house, or nice homes around the world. Maybe you've got some in stuff like a Berkshire Hathaway or the S&P 500 or whatever it is, but you've got a decent chunk of that in stuff that yields cash and dividend stocks. Let's say you can bring in, between $500,000 and $1 million a year. Anywhere in the world, you can live pretty well on that. And so what I would do to myself is I'm telling myself, I'm going to spend what that throws off. And so if that means I'm getting to the end of the year and I've been living too frugally, I'm taking a private jet flight. I'm taking a helicopter somewhere. I'm going to the ski resort that costs a fortune. And I think when you do that, what a lot of entrepreneurs who are in that building mode that I constantly feel in, which is what motivates me, is you're like, well, let me just save that money. I'll just put that back. Investors are just also like, oh, I'll just put it back into return. What if you had a pile of money where you had to spend every year? I bet you would do some things that would elevate you as a person, and that elevated person would then be better in your business, driving a further delta between your business being run by someone that made your growth business much less risky versus investing in some growth stock where you had no control, because you can constantly level your stuff up and you know exactly how to run your business. And so I think that, taking money out of a business for an entrepreneur with an entrepreneur mindset like as I have is a dangerous game. My investor friends say, well, just invest in the growth stocks that don't pay a dividend and sell a slice every year. Why would I sell a slice of something that's winning? Just emotionally speaking, it's like, how much of a slice should I sell? Okay, it's the stocks are doing well, so I'll just sell a smaller slice, live more frugally. And then I'm not going to do the stuff that levels me up. Every time I level myself up in terms of what I spend, my mindset elevates into thinking bigger in my business. Maybe I meet higher level people that help me in the business, and the returns on that are far more exponential than my Tesla stock doubled in the last year. Imagine if you just took out, the cash flow that you knew you had to spend this money because it came from the personal slice that you took, and you just were going to spend that. You'd probably again be doing some stuff where you would elevate the business. Now, what I've done is done this in a much more tax-friendly way to where I think, generally speaking, if a corporate tax rate that's zero makes your life a lot easier. And then you leave your country and go and live in any country that you want. Now, you might choose to live in Italy, where they've got a 100,000 euro lump sum tax, and 100,000 divided into your income, that's your tax rate. I'm not saying you have to personally pay zero tax, but you can choose a tax rate that serves you, and you pay that personal level of tax. A lump sum system, like what Italy has, where you just pay a certain amount, make as much as you want. A non-dom system, where only what you remit to the country you're living in works. So if you live only on a small slice of your wealth, that goes faster. Territorial tax country, tax exempt country where you get 5, 10, 12 years, whatever, for free, or just a tax-free country where your income is tax-free. You live in the Bahamas, the Cayman Islands, for example. Any of those countries can work where you basically say, hey, my business is making $5 million. I'm going to reinvest $1 million of that because that's probably going to generate a couple million more. That's going to be a great growth stock. And that's going to compound over time. I'll take out some of it as dividends, and rather than getting taxed on the corporate level and then taxed again when you take a dividend, what if that's 0 and then 0, or 0 and 5, or 0 and 10? You're going to build that slice a lot bigger, a lot faster, and then you can compound that by investing in putting your cash in, let's say, banks in Singapore where the interest isn't taxed, or investing in dividend stocks. Banks in Singapore, for example, where the dividend isn't taxed in Singapore. And if you're not taxed on the dividend where you live, well, now you've got tax-free, 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 just because kind of all along the way. If you want to live in a place where the tax rate's 10%, that's fine, but it's better than where the tax rate's 40%. You're building your slice bigger. I would argue if you're an entrepreneur who's willing to sacrifice, do that for a certain number of years, build your slice, then move to a place where, all right, maybe the taxes are higher. But it all compounds. Now, I understand that there are some people out there who say dividends should be avoided, and they give one reason that I think doesn't make sense if you follow what I'm talking about. If you are living in a tax-friendly place, if you've constructed your life to be tax-friendly, you don't have to pay tax on dividends if you invest in the right places. If you have dividend income from countries like the US, you're never going to totally get rid of that, but where you live could potentially reduce that. And you could open up new markets where if you invest in them, they don't have a dividend tax. So I think that investing a certain way for taxes is backwards. It's the tail wagging the dog. Set yourself up to where you can keep the most amount of money possible and then figure out how you should invest. And so if you want to take taxes out of the equation, Nomad Capitalist helps people do that. Again, I'm not saying you should always pay zero. I'm paying more tax than I have in a long time right now. And I'm happy to do that. But you know what? It's not 50% of my income because I'm not using that level of roads and schools and bridges. I'm paying something that I think is very reasonable. Maybe it's more than a lot of people pay where I'm living, but it still allows me to keep the vast majority of it. Nomad Capitalist helps you figure out, are you willing to move somewhere else? Where would you like to move? There's probably a lot of countries that you don't realize are very tax friendly, like Italy, that are. You don't just have to go to Dubai or to the Bahamas. There's many other, we've helped people move to 31 different tax friendly countries. And so if you want to learn how to dramatically increase the amount of money that you're keeping so you can build this slice faster and put more money back into your business, it's just exponential upon exponential upon exponential returns. And you can go to nomadcapitalist.com/apply and learn how we can do that. We generally work with clients where they pay us an upfront fee and they're going to get an ROI on that money very quickly. Just setting up some offshore company is not going to solve your problem. You want a whole plan of how that works from people who actually understand this, because I've been through this myself. Warren Buffett, they say, pays a very low rate of taxes. We can help you figure out how you can do that. It's a different way than Warren Buffett might do it, but I disagree with him on just selling a little bit of slice. Listen, obviously, I'm in no position to disagree with Warren Buffett. From just my personal philosophy of having my own pie of money that's always going to be mine, I don't want to have to determine how big of a slice I'm going to sell of my Berkshire Hathaway shares every year to eat. And again, he's an investor mindset. If you're an entrepreneur, I think just having a pile of money dropped on the table every January 1st, and here's what you have to spend this year. What I would do is have it in a number of different banks around the world. End of the year, funnel it all into one big bank, take all the dividends, funnel that in the same bank. Here's one bank. Here's the money you have to spend this year. Go spend it. Don't leave anything at the end of the year. If you want to give it to give some to charity, do that. Spend it on whatever makes your life better. And I just think that is a better way to go because your business is the fast growth that you know. That said, I don't want you to go all in on just saying, well, hey, if my business collapses tomorrow, because who knows what could happen. Black swan events happen, competition happens, who knows? You want to have that pile of cash. And for that pile of cash, my growth appetite is going to be lower than someone who's only focused on investing. I think understanding the mindset of who you are is very important. That's how I do it. And I think the tax friendliness that Nomad Capitalist can help you with is a very important part of that.